Looking at the four currency pairs initially that I'm going to talk over, the euro dollar, the pound dollar, the Aussie dollar, and the Kiwi yen. All right, these are very noteworthy technical moves, and there is a variable degree of fundamental influence. Now, two of these trades actually look quite good. It just so happened that I didn't associate the necessary conditions for entry, but two others are not going to be very attractive. Now, the one thing to appreciate, or the first thing to appreciate, is time frame. If you can see here, I am actually looking at this Kiwi yen on a daily chart. And you can see how progressive this bull trend has been until this tentative break here of this very prominent wedge formation. Is it a confirmed break? We'll talk about it in a second. Now, if I also look at the other pairings, like the euro dollar, all right, that's something to appreciate, that it's a little bit of a lower time frame, but you can see the dominant trend, and we have seen a tentative break. Now, with something like the pound dollar, I'm looking at a much smaller time frame. All right, this is a 4-hour chart compared to a daily chart. You can see much more interactive price action. Now, I've discussed in a couple strategy videos and in the regular trading videos the impact that the time frame, or at the very minimal, the charts that you look at can establish how long a trade is presumed to take. All right. Now, when I look at something like the Kiwi yen, the conditions here are a rising wedge formation that has developed arguably since way back here in June of last year. So we're talking about a 7-month wedge formation with a clear gradient, a bullish trend. Right? To establish a correction, if you were playing a break, how long would you assume that this trade would take to play out, a reversal play? It would take at least a couple of weeks, or medium-term time frame, a couple of weeks. If you were running on exceptional expectations, unrealistic expectations, some people would say, oh, I would think that it takes a day or 2 days. To play out a pattern of this consistency and this persistence, all right, yes, at the very extreme, if we had a massive unwinding, that could play out maybe in a couple of days. But realistically speaking, that isn't the time frame that this trade would take. All right. So, if you are looking for a time frame of a couple of weeks, all right, if it's at least 3 trading days that trade would take to play out, taking a trade into the weekend on a break like this, or maybe a range reversal, is not a good idea. All right. Why? Because you're tentatively getting into a trade that takes time to develop, and subsequently, that time frame. Within that time frame, you can also see that the conditions significantly change. Not just can this market start moving back up to the upside given certain circumstances, but it could also completely lose its momentum over the weekend. All right. If that's the case, we don't have a trade. It can turn into a congestion pattern where it might eventually turn into a breakout, but congestion is more conducive to a break to the upside or downside. That's when we get closer to 50-50. And we take away the momentum or the appeal of a technical break like this, which can immediately be construed as a reversal. All right, but you need that follow-through. That is a very important aspect of that trade. Now, I take these same kind of circumstances when I look at something like the Euro USD. I'm looking at an 8-hour chart. Now, while this is a little bit smaller in terms of time frame, or a little bit zoomed in, it would still take me a little bit of time. And certainly for this particular pair, you can see how choppy it's been as of late. Follow-through is not going to be immediately easy. All right, so this is also one pair that I'm not particularly fond of and taking into the end of the week. I need conviction in the follow-through. And the time frame is one aspect. The level of conviction and the persistence as we pick back up that theme over the weekend on Monday, early in the Asia session, it's going to be a lower probability for the Euro USD. All right, so we have two circumstances here. Time frame and likelihood of conviction. That's where we get into market conditions, and I spoke about earlier this week my 3 necessities for analysis: technical analysis, fundamental analysis. Most of us are familiar with that, but market conditions is another one of those. And in market conditions, we talk about volatility, we talk about participation and momentum. All right, those aspects are absent with this particular currency pair. It is more conducive to congestion, and the theme necessary to get this moving is perhaps not going to be that prominent. It's not going to allow itself a major driver. If I look at the data that would associate itself to the Euro USD, we do have a couple of noteworthy pieces of event risk. I think the real interesting stuff doesn't happen until Wednesday. All right, and we also have the Eurozone Composite on Thursday, but we don't really tap into the most necessity fundamentals, risk trends, and relative monetary policy. All right, the Fed's next rate decision is the week after. The ECB is meaningfully working against expectations of an LTRO program. So these do not present themselves as being immediately conducive to the Euro USD, and that follow-through potential is looking dubious. All right, so the Euro USD is a market condition, fundamental condition, as well as a just we can look at it from price action, but that's really what it boils down to. Furthermore, on Monday we have a market holiday. All right. So when we think in terms of the potential for a big risk aversion move that would help drive a Euro USD down, remember the conviction necessary to drive the Euro USD based on risk trends is much higher than many other pairs, particularly yen crosses. All right, that would play out beautifully if we had risk aversion for Kiwi yen. All right, it would be very responsive. However, in a holiday or during holiday trading like that, when there's a disruption in the circulation of risk trends from one session to the next, you very often see that the market just sits on the sidelines until we rack up to full liquidity. All right, so that is going to be a problem with the Kiwi yen, and certainly not going to provide the necessary drive for a euro dollar. So Kiwi yen and euro dollar were not necessarily pairs I'm going to take a new trade on into the week. Now, the pound dollar, shorter time frame. All right, this actually made its break, and you can look at this on a 4-hour chart. It was also very, I was actually looking at this overnight on a 2-hour chart. The only reason I didn't take this trade from this break, which was a series of wedges where the floor changes, depending on where you're looking at, is that I actually fell asleep. All right. Seeing this move and knowing that I'm looking at this on a 2-hour time frame, how long would I expect this wedge to play out? So it actually goes all the way back to approximately Monday. All right, so it does have a week's worth of congestion building up, but if I had a breakout early on Friday, I would have all of Friday to play out the breakout. So the breakout itself, if I were looking for a measure of the range, that would be actually quite expressive or extensive to expect that, but nevertheless, I can expect that to play out within one trading day, which is exactly what this did. All right. Now, on those circumstances, this is occurring on a Friday, all right, but it's not something I'm going to hold into the weekend, but it's a week-ending breakout. All right, but the time frame says I can get it in before the clock winds down to zero. So this is more of a trade that would be conducive to those kind of circumstances. Now, this is on the shorter end of that time frame. I also like the longer end of the time frame here, Aussie dollar. I can look at this on an 8-hour chart or a daily chart. I prefer to look at it an 8-hour chart here. But the Aussie dollar made that very substantial break to the downside of this congestion pattern, all right, below 89, and we've slipped to fresh 3-year lows. Now, the bigger picture is that under multiple scenarios, all right, this is what I showed yesterday, multiple scenarios, risk aversion, the Aussie dollar drops. If we pay attention to monetary policy, the Aussie USD drops because we're talking about taper versus the RBA, which is still expected to potentially cut once again. While I think that is not likely, it doesn't matter. That's what the market is currently expecting. And if we had a risk positive drive, the dollar is not necessarily very highly correlated to risk trends right now, or negatively correlated to risk trends. The Australian dollar is definitely not. So this, under really all three scenarios, has good conviction in that bear theme. All right. Now, I would have preferred, and the reason I'm not in this short is because I would prefer to have seen a bounce back up to these previous swing lows as an entry point. Now we did hit this previous swing low, but that wasn't enough for me. I was actually perhaps a little bit too greedy, looking for something around the order of 88.75. So we did not get back up there. I still think this has great potential for follow through. All right, and if it did get back up to this previous support and treated as new resistance, I would have taken a short. But that's because while it will take a longer time frame to play out this kind of follow-through theme, as we can see, the bearish leg is very consistent, and with further fundamental pressure, it's more likely to find that follow-through. All right, so time frame is an aspect. Possibility of follow-through is an aspect, all right, and certainly the weekend can disrupt those circumstances. But between the two of them, using them together, time frame and market conditions, and also fundamentals as it impacts it, and we have the technical sparks or cues that would make this interesting to us, make this relevant to us, they can change the circumstances and the probabilities of taking a weekend trade. I would not take a Kiwi yen because it really contradicts the larger time frame bearings. All right, it really needs a lot of fundamental pressure to make a move to the downside. We don't necessarily have that going into the weekend. There's nothing that says we're going to have an immediate risk aversion theme. We don't have risk aversion, but it can continue to the downside, it's probably going to do so in a more measured pace, and I would have plenty of time come Monday to take that trade. Euro dollar, all right. Time frame is not as much an issue, but it would take a longer period of time to play out because this has been recently more choppy. Fundamentals, once again, are not very supportive of this condition, so I do not like taking it into the weekend. We could see a continuation, but this one would certainly take its time. The Aussie dollar, I think this break is a very good one. I would have just preferred to see a bounce to get in a better entry. I think this similarly will take its time. It's just a virtue of these market conditions, but this is one that certainly can be held over the weekend. And the pound dollar, a week-ending break that doesn't even have to be held over the weekend because it made its profit, or it would have made its target within the time frame that we have through the end of trading. All right. So these week-ending breaks, technical moves, I know they draw on a lot of us, and we have a hard time establishing, is this a good time to take this trade, or is this not a good time to take this trade? And hopefully this helps you establish or analyze these kind of positions that you see that develop later on going forward into subsequent weeks, subsequent months, and throughout the year. All right, because I can guarantee that these will be happening throughout 2014. All right. Good luck trading out there, guys, and we'll do our next Forex strategy video next week.